But let's now welcome on board Jonathan Hunt, MD and CEO at Syngene International. We also have Sibaji Biswas, the ED and CFO, joining in on the show right now. Gentlemen, both of you, good to have you on the show. Jonathan, if I could start off with you, tell us how the Biosecure Act benefits your company in the long haul, and how is it likely to impact the broader industry as well, specifically the Indian players?
The Biosecure Act is sitting on top of what's a longer, broader trend, which is around partly geopolitics and the rising sort of competition between the US and China, and how the geopolitics between those two economies are playing out in the rest of the world. And then there's a deep learning, I think, that really came to the fore during the COVID pandemic. You've seen a lot in many industries, boards, management teams really look at supply chain resilience, where you have dual sourcing. And if you have got all your eggs in one basket, no matter how good a basket is and no matter where it is in the world, that can lead to an overexposure and a risk if your supply chain breaks down. So I think one of the learnings that came out of COVID for many companies in many sectors was really think about very long extended supply chains where you've got single source vulnerability and where you can balance and mitigate that risk by bringing in second source suppliers and having a dual sourcing approach. So it's as much about that, the opportunity, as it is about the immediate politics of the Biosecure Act.
Okay, point taken. Sibaji, hi, good to be speaking with you. With the changing dynamics in global pharma, what signs of emerging potential do you see for Indian CRDMO players and the CDMO players, and how is Syngene positioned to tap into these opportunities then?
It's a positive trend, but that trend will play out over the next 5 to 10 years. So it's not something which will happen only in next 1 or 2 quarters. So what I see and what we see as an organization is a very positive decadal trend going forward. The size of the industry, the CRDMO industry in China, is very big. So the volume that we are talking about is quite big. The good part of that story is that the approach has been very pragmatic around Biosecure Act. So we have a period of close to 8 years going to benefit out of it. Syngene is an integrated player across the value stream and is very well positioned to capture this trend. We have deep talent base, we have good infrastructure, we have been building on capabilities and expansion. We are also doing a lot of digitization automation. So I think we are very, very well placed to capture this opportunity in the near to long term. So very well placed, and I think it is a good traction that we'll be seeing in the next few years.
Jonathan, have you seen a rise in RFQs, customer visits, pilot projects from innovators evaluating your capabilities now?
Yeah, absolutely. We're seeing that within Syngene. I commented on that earlier on in the year when I was talking about the first quarter results, and we guided a little bit towards that at the beginning of the year. We're seeing the same trend. Others are quite a heightened interest from audit teams coming on site to come and test our capabilities. Pilot projects, RFIs and RFPs are up strongly, 50% plus year over year in terms of the volume of that. And then to the question you asked Sibaji about how does this play out, it's happening now, and it's embedded actually in our guidance and the description we gave for this financial year. As you saw in the first quarter, we were still being dragged, as many in the industry, slowed down by the biotech funding issues in the US and the challenges some of those companies are having in raising new capital. And we said we expected that to continue into the second quarter. So that would really set the tone for the first half of this fiscal year. And then we predicted in the second half that we would see a trend break and a return to good growth. And that's these factors playing out. It's those pilots coming on board. It's us winning our fair share of the RFPs that are in the market. The volumes are up on RFP requests. And then we've got to pull that through into long-term relationships. So it's embedded in our guidance for this year, and then I think that will color our guidance for next year, but we'll do that when we get to the full year results.
Right. Sibaji, what are the key capex plans that you have, and how is it that you're now looking to diversify your supply chain and also enhancing capabilities?
Yeah, there are two questions over here. One is CapEx plans, right? So we have been expanding our capacities, building capabilities, as I said, and we have been doing that for some time because we saw this coming. One Biosecure Act, but as Jonathan was saying, we could see, innovator global companies looking for supply chain resilience, and we could see that play out. So I think we are very well placed in terms of, our existing infrastructure capacity and capability to capture the growth that we are expecting to see. Going forward, obviously, as it plays out over the next few years, we will invest capex in line with the growth that we see, the demand that we see. Will be calibrated because we are very focused on how to generate long-term returns, but we will not stop short, will not be shy in investing because we believe this is an opportunity which is a once-in-a-lifetime opportunity and will create real value for the shareholders in the long term. So our capex plans will actually follow, the demand curve that we see. But we are confident that over the next 5 years, 6 years, it will be quite a strong demand, and hence we'll be more than willing to put capex to kind of service that demand. We have a strong balance sheet, so I think we are well funded and well placed to kind of build infrastructure that's required to take care of the demand. The other question that you had is on the supply chain. Now, historically, there has been a lot of dependence on China on the supply chain, particularly the small molecule side. Fortunately for us, we started work on building an Indian ecosystem, Indian supply chain a few years back, and we have made very good progress over there. But again, building a complete supply ecosystem is not a short-term plan, so it will take some time, but we are making very, very good progress. And in some cases, we are able to give our clients a potential option for having a non-China supply chain also. So we expect to see India gradually building its own supply ecosystem across the value chain over 3, 5, 7 years, but it's definitely the direction is right and it's happening today.
Okay, Jonathan, experts see maximum opportunity in small molecule research. Would you agree with this, and where do you see the most potential?
Oh, that's interesting. No, we're seeing an increase across the full range of what we do, whether it's research, small molecules or large molecules. I'm seeing clients interested in both of those, into development and then into manufacturing. So I don't think it's only going to be small molecule research. What I can see, though, is that that's the more portable or transportable type of work. It tends to be shorter contracts, it's a little less sticky, it's easier to switch from one vendor to another. So it wouldn't surprise me at all if we saw research programs and research activities being at the front edge of what rotates out of China. And then I think because of the nature of the work, it's structural, development and manufacturing, much stickier types of programs. There's a lot of technical revalidation, tech transfer work that needs to go on. You just can't move your manufacturing supply chain overnight in the pharmaceutical industry because of the regulations, because of the high focus on quality and the controls that go with it. It's a very technically led, measured process. Even if you want to move quickly, that can be 2 to 3 years to get that sort of work done. So, if other commentators are interpreting that as research first, development, manufacturing later, they're sort of moving at the same pace. It's just one of them plays out on a shorter timeline.
Right. Jonathan, what about the Mangalore plant utilization, and how is it that you're looking at, ramping it up? What's the pipeline for that, for small molecules?
It's busy at the moment in the early stage of the development piece. That's the hopper that fills the pipeline for later. So it's quite a buoyant market at the moment around early development programs. The team are as busy, I think, as they've ever been. So that's a healthy indicator, and we'll see how that plays out. Each one of those programs has got scientific technical risk. If they meet their requirements, they've got the opportunity to progress, but that's in the hands of the science rather than something that we can determine. So we'll watch that. Mangalore as itself, it's part of a broader CDMO strategy that's both small and large molecules. So you've got to look at it in the round. And I think we're making reasonable progress. Like any chief exec, I'm always happy to have more and do more, but we're making progress in the right direction there in our CDMO strategy.
Okay, and Jonathan, what's the progress on the biologics manufacturing assets that you had taken over from Stelis, expected to be capitalized starting the second half of this year?
Progressing well. The facility looks in good order. I visited it the other week. We're doing the upgrades and the adaptations that we wanted to. The team's doing a good job bringing on that line. But again, from an investor capital markets point of view, that's just putting in headroom for growth for the next 5 and 10 years. That's not about the next few weeks and months. So it's a technically led upgrade of the facility at the moment, and then it'll be ready to take to the market once we've completed that.
Right. So, Sibaji, currently 60% of your revenues are coming in from research, 40% from CDMO. How is it that you see this mix moving in the near future?
Over a period of time, yes. As you know, development manufacturing revenues are more lumpy. So over a period of time, we expect that development and manufacturing revenues as a share to go up from where it is at this point of time. But also I want to mention, we expect to see a strong traction for discovery research also. So where it will exactly end, at what point of time is difficult to say. We see strong growth from both parts of our business, but logically speaking, over a period of time, development manufacturing as a share of our revenue should be higher than what it is today.
Jonathan, lower U.S. biotech funding had hit the business last year. Are you seeing a recovery in funding environment for discovery and development at least this year?
I mean, to be more precise, I think what I said last time we spoke was I was starting to see signs of stabilization. And that would set a new level, and that seems to be playing out. It's not clear which direction it's going to go. It's stopped declining, but it's not necessarily rebounded. But it's still at a decent funding level. If you go and look at the amount of money that's flowing into US biotech, it's come off the peak that we saw during COVID, but it's back at around the levels that we considered normal pre-COVID. So that should be a healthy environment, or at least a stable one for the longer term. And of course, biotech isn't our only segment. We also support the pharmaceutical industry, the major biopharma companies, and we have exposure to other industries as well. So it just seems to be stabilizing. I wouldn't say it was sort of bullishly recovering yet.
Right. Jonathan, lastly, any updates or changes that you may be making to your FY25 guidance?
You'll ever get. I think the guidance is good. I mean, for the year, and of course, so close to the quarter end, that would be something we would cover with our quarterly reporting in terms of giving our investors a sense of how the business is going. But largely, it's panning out as we expected. Pretty muted in the first half of the year, and then we've predicted that we see a re-acceleration in the business in the second half. That was the guidance we gave at the beginning of the year, and not seen a reason to change that yet.
Thanks, Jonathan, as well as Sibaji, for making time and speaking with ET Now today. So that's the latest coming in from the pharma industry as to what the overall potential is for the US Biosecure Act, because the street has started penciling that in as far as numbers are concerned. A quick look at the stocks before we move forward. Take a look at President Johnson up